Hello, everyone. Thank you so much for joining us for our I have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, what happened in the markets last week?
Yeah, thank you, Jeremy. Thanks for our listeners jumping on the call. We had a market of all-time highs last week. We had some cooling inflation, some retail sales, some other economic just cooling, really sending the markets up. So we saw the S&P, the Nasdaq, the Russell all up about 1.5% to 2%. And we saw the Dow Jones Industrial Average pass 40,000 for the first time in history. So we saw about a 3% jump in technology stocks, crude oil, gold, all up about 1.5%. We saw the U.S. Treasury yields fall a good bit with hopes that this cooling CPI numbers that we saw might spur the Fed to lower interest rates a little bit more or maybe a little bit sooner. So on the CPI front, we saw the April CPI gain about 0.3% month over month, year over year. That was up about 3.4%. Now, if we look at the core CPI, that cooled for the first time, that cooled for the first time in 6 months. We did see shelter and gasoline continue to have most of the price increases when we're looking at those numbers. And that resulted in a bump in the producer prices. Overall, we just saw the numbers representing a small step, but a small step, hopefully in the right direction when it comes to inflation in the Fed with interest rates. Only a sustained trend would probably push the Fed to really lower interest rates if we start to see that in September. So let's look at U.S. retail sales are pretty much flat. We saw industrial production stagnant a bit. We saw manufacturing declined again in the New York region. We did see some new orders, some shipments turned negative with the Philly Fed survey. Home builder sentiment, that fell for the first time since November. Again, putting pressure on that side of the market with those higher rates, those higher mortgages. We saw housing starts, permits, both less than expected in April. If we kind of look at overseas, we saw Japan's economy shrank more than expected, maybe a question mark if they're going to raise rates now. We saw the Chinese manufacturing output beat expectations in April, but their retail sales slowed. The Chinese government still got a pretty big problem with property values over there. So I think they're taking some pretty big steps to kind of shoring up their property issues. If we look at economic sentiment, I think that improved over in the Eurozone, showing some signs of some economic recovery. And Jeremy, if we kind of look at this week, what are we expecting? A lot of Fed speak. I think we got some Fed FOMC members, some Fed members out and about talking a good bit. I think we'll get some minutes coming out this Wednesday. We could see a bit more clarity in terms of the direction of the Fed, at least with the committee members. If we look at existing home sale and new home sales, they'll be coming out, some durable good orders. We'll see some revisions with consumer sentiment figures. And then we have technology. We really got a big one here. We got NVIDIA coming out this week. And then we have some retail sales coming out from Target, probably setting the tone of what's going on with the consumer. And maybe some question marks. Is NVIDIA driving this market, holding this market up, or does it have anything to do with NVIDIA anymore? If we go internationally, I think we'll just be getting some inflation updates. That's primarily on the docket from the UK, Canada, and Japan. Jeremy?
Gotcha. Well, appreciate it. So I had a question for you. So going into the summer months, what do you see for the investment markets?
Well, barring some geopolitical event or a spike up in inflation, I think it could be a pretty tame environment. Always expect volatility. I don't know if we'll get a 10%, but listen, we got a 5% pullback a couple months back. So I think the market could meander a little bit. there's an old saying, don't short a dull market. So maybe that's a little bit of what we might see. Maybe a little bit of a dull market. That might not be a bad thing. Maybe moving sideways a little bit, maybe moving up a little bit, but no big moves until I think we get maybe more towards the summer, more towards the fall, get towards the election, a little bit closer to Fed decision on what they're going to do with interest rates. So maybe sideways action that might be in the cards.
Gotcha. Well, also, I guess follow-up question to that, maybe do you have some general advice for the investors right now?
Yeah, I think generally stay diversified, stay patient. We've had a great market. We've had much more involvement in the market. So it hasn't just been from a small group of stocks or certain sectors like technology. It's really been broadening out a bit. And I think that's very healthy. And I think that's what we want to continue to see. So stay diversified. I don't think you have to bet in anyone, necessarily bet in any one direction. And be prepared for some volatility. It's just going to happen. The market's moved up really well. Just be patient, be vigilant, stay diversified. We'll do just fine.
Gotcha. Well, we always appreciate the information. And to our listeners and to our customers and clients, we do have our 5th annual car show coming up here on June 8th on Saturday from 10 to 1 here at the office. So if you or a neighbor or somebody has a classic car or a fancy car or a motorcycle, a bike, or truck, whatever, please call the office or email me and we can get you signed up for that. But we look forward to having you. So next time, we'll see you next time. Appreciate it.
Take care.